Hello, my name is Amit Maurya, and thank you for tuning in to my channel. Okay, today's topic is going to be strategy, buying and selling. Um, Strategy could be defined in what you want to do it repeatedly, more or less, without having to think much later down the road, or more like a method that best way to go about it. So when it comes to investing, I would say this applies to like any general investing, but this is more true in the stock market. So in a stock market, you have a couple of strategies. You could have dividend plus growth, okay, which means that company either monthly or quarterly they give you money, and they are still growing every single year, and it still provides really great value. So this is one example right here in my M1 Finance. Then the next strategy, you could have pure growth companies. Okay, that means you buy today, and tomorrow they are gonna go. You don't know where they're gonna go. I'm gonna give you example of each one of these. Okay, guys, so bear with me. The next strategies that you could do is called fixed income, more like a somebody later down the road who wants to retire early, and you still want to have passive income, retirement money, right? So this is where this fixed income thing would come in. You want some kind of money like monthly basis, more or less. And then the last thing you have is just pure dividend pairs, I would say, which is the dividend kings. They don't really go much high, but they don't really go down because they're very, very, very stable because they're just the largest company. So let's get with an example. Let's look at Exxon Mobil, for example, and how this is an dividend plus growth, right? So if you go here in Seeking Alpha website and you put in XOM, you can go to the dividend history. Then you can look at the years of dividend payment, which means 39 years. That means they are behind about 11 more years before they can be dividend aristocrats. Okay, and then you can look at here, every single quarter they pay you 87 cents for owning one stock. So 87 times 4, they're paying you essentially $3.48 every single month for owning their stock every single quarter. Not month, I'm sorry, quarter. Okay, quarterly. All right, and let's look at their price. So if we go here, right, in 1 year they have grown 66%, and 5 year obviously they are negative because demand goes ups and downs. In 10 year they're probably negative. So this is somewhat example of dividend growth because they're very fairly stable and they grow. But another example would be let's look at something else from here. Maybe let's look at something consumer. Maybe Costco, COST, COST. Right. If you look at their price, in 1 year they have grown 18%, 5 year 116%, in 10 year 356%, and max they have grown is, they don't really say, but 300 probably some percent. All right, so this is give you an example. If you go on dividend and dividend history, they do pay quarterly, and there's some other, I guess these are specials that they I guess this is a mistake. There's no way they're paying you $10. 70 cents each quarter. So if you do 70 cents times 4, $2.80. This is a perfect example of dividend growth because over time they are paying you dividend, and slowly they are growing. Their value that they provide to the people is growing. Therefore, is going up, is beating the inflation and everything. All right. The next example would be I have a is the growth companies. Really, people like I am in technology, if you don't know that. So I feel more comfortable predicting technologies or where they are in the things in terms of their usefulness, right? So these are the companies that I think they are gonna grow. Obviously, in 1 year, they have grown me 46%. I just put in $100. This is what I have gotten. I had a more company, but I sold, and then and 1/4. That's so in 1 year. This is the return that I got from them. Okay, this is wrong, but this is right. Okay, so let's look at a company specifically dealing with growth strategy, more or less. Again, these ones do not technically have any dividend, so bear with me. So here I have a AMC stock. This is my Robinhood account, right? As you can see right here, in 1 day they are changing 8%, in 1 week 32%, then 93% in 1 month, right? 182%, 261% AMC, right? And over 5 years they gone down, but this is more like has to do with growth of a company, that you buy low and you sell high. Okay, so it's all about timing. So this would be a perfect example of what I use Robinhood and what growth company would be. The next strategy would be fixed income. So let's look at fixed income companies like Realty Income Corporated. I don't really like, so these companies that I have here, right? PBA, RNP, Main Stack. I don't really have it for more or less say growth. I have it for growth is nice, right? Because I have gotten growth. If you look at right, 135% over time, right? You lose money, you gain some. But what is the most important is that every single month they give me money. Okay, so let's look at PBA. So if you go here, dividend history, 22 years they've been paying monthly. Look at this. Every single month they're paying you money. All right, so if I were to retire, let's say if I had a lot of money and I were to retire tomorrow, and I would still have every single month money rolling in, so I don't have to sell any of my, or dip in my savings, sell any of my stocks, right? That kind of stuff. So this is where it comes really handy. Okay, so that's that. And lastly, this is just pure dividend growth. I would say I like Johnson J&J. Let's look at J&J. And J. You just put your money in, and I don't really do it for, let's say, growth, but I did it for the purely dividend. Okay, see, they're paying you over $1. That's really good. And if you look at summary, they have gone up, but it's not as much, right? They're very stable. So look at this. Okay, so last thing I want to talk about is why would I have different strategy at the same time. Okay, so my take on the reason I have multiple strategy working for me, there's no rule that says you can't. Therefore, why not try every single strategy, and whatever produces you the most result, or whatever you feel more comfortable over time, you can refine your strategy. But why not learn every single strategy there is, so that you are better prepared in investing world. So this is kind of my thought process. Obviously, I have different money in different one, right? If you look at how it allocated for that particular reason, even if you look at my Robinhood, I use it mostly for buying and selling, more or less. So as you can see, I even have some options trading, which I don't recommend if you're a beginner, but it's very important that you learn every single strategy, and then over time you'll become good at it, and then you'll know exactly what you like the best and how do you want to do it. I know myself, I get bored with one strategy and I'm not that disciplined. Therefore, I like to know everything and I like to try everything. And it's kind of keeps me busy and it keeps me entertained. Okay. All right. I hope this gave you guys some insight into investing in terms of different strategies that are out there and how you can use it to your advantage. Thank you.